All right, gang, we're not going to take a lot of everyone's time, but did want to had some conversations this week with some traders just talking about debriefing their trades, and that seemed to be a novel concept to them. And so I wanted to walk through like what is a debrief, why would you debrief, how is that going to help you uh, in your ultimate aim as a trader. And so with that, let's jump in here, shall we? And we're going to rock and roll. And we're even going to kind of do this process on some trades I took today. And this whole thing is meant to be uber simple. I've found that systems that you can put in place are effective the simpler they are. If they're complex, they may be really have all the bells and whistles and great, but if you don't use them, then that's not ultimately helpful. So I just want to go through a really quick matrix of questions, looking at a trade, and then how you can use that to your benefit. So real quick, just if you're operating in these markets, this is not something you have to think a whole lot about. You're very aware of risk, and one of the ways that I can always pick out if somebody is new to markets, or they haven't really, they're kind of blowing smoke my way, is that they talk all about the opportunity. Oh, I made this much. Oh, look, and the people that I know that have been around for a long time and have been able to stay in this game, they talk about, hey, here's how I got my risk as close to my stop as possible. Here's how I kept my risk in the right ratio to my potential opportunity. So when you're risk focused in this business as a start, you're already off on the right foot. Those of you who don't know me, I'm Josh Schuler. I'm the founder of Trade Profile, and I'm I'm living the dream in the fact that I started on the retail side and came to trading kind of later in my career, and was able then to move into the industry through RJ O'Brien, which is one of the oldest futures FCMs in the country. With me is JP, and between the two of us now, we're pushing 25 years of active trading in a full-time capacity, meaning it's a full-time focus, it's a stream of income, and it's something that we enjoy very much. We work together helping traders build trading consistency. So if anybody ever asks, like, what's Trade with Profile, what are you about? We're a skill development firm. So somebody comes to us because they don't have consistency in their approach, and so we have a process to help build consistency. Not making any guarantees on your profitability, but we will make a guarantee that if you work through our process and do the work, and I admit that it's rather rigorous. If you do the work, you will lead to greater consistency, and greater consistency has a byproduct, which is greater profitability. We do that by focusing development around three kind of core ideas. That we believe that there are 4 behaviors observable in every auction, so you need to be able to see those. There are 4 questions to ask before you enter a trade, and then there are 4 stages of auction competency, and you need to know which one you're in. And where those 3 overlap is where we find consistency in trading. So while we're going to have some questions at the end, this is more of a skill enhancement session. So I have kind of a number of things I'm going to take you through. But what I want to talk about today is talk about debriefing trades. And so, at first you might say, well, okay, like what is this? I've never heard of debriefing trades. Why would I do this? What's the point? Well, one, the aim is consistency. There is no holy grail. You're not going to be 100% accurate in your trades. You are going to have some losing trades, but you can build this as a business. You can build this as a stream of income if you're consistent in your approach. So that's one aim. Second is to eliminate errors. If I eliminate errors that cost money, which aids my consistency, I'll do better. It's going to help prepare me for future trades through mental reps. So one of the challenges of getting to a further along stage of competency in markets is you just don't have enough time in the saddle. Especially on the retail side, if you look back and say, well, how many trades have you taken in markets? If you're south of 100 trades, you are way behind in terms of number of reps. When you've done 1,000 trades plus, and not only that, but 1,000 trades with good expectancy in those trades, now we're getting somewhere. So doing a debrief of the trade is actually a way that you can add reps. So like you did the trade, that's 1 rep, and then you debrief the trade is another rep. Okay, so you just doubled your instances on 1 trade, which gets you better. It's going to help enhance your critical thinking skills. Trading is not a game that is where you can't think. You have to think. The number of inputs that we have to sort through and think through as we're trading are vast, and the brain does all of these like really quirky things to try to convince us to not take a trade or to stay in a trade that we shouldn't be in. And so you have to do some mental gymnastics, and this helps build the right neural pathways for that. And this is also effective not just for losing trades, this is for every trade. In fact, it can be really detrimental to your trading if you only review your losing trades. Because I often have conversations with Jed has conversations with traders who actually took a winning trade, but then when we ask them, we kind of walk through the trade. What we find is that there was no process in the trade. So what they really did is they got lucky. Now here's the danger of this: when you put the trade on, that there was no process, no rigor, or anything around it. You just had risk on, and when you're rewarded for that primes the brain to continue to do that. Okay, it's gonna the brain says, oh, I got a hit of dopamine off of this. I didn't have to do all the process, so I'll do it again because I'm going to get the same dopamine hit. Only what's going to happen the next time? The next time you're going to get lose, and then because there's no process behind it, you're not going to know what's going on, and you can get really run over and get really hurt. So this is effective for losing trades and winning trades. So it helps maybe eliminate losing trades, or it helps make a good trade even a better trade. Okay, so the reason to do this, and ultimately to gain confidence for that next trade. When you're not going back and debriefing your trades, often what will happen is, especially if you're not being consistently profitable, is that it will start hitting the brain and it'll start rocking your confidence. And you have to, when the setup is there, you have to take the trade every time. You can't know if that trade's going to work or not. So you have to take it based on all the conditions, all the reasons why you define the trade. But confidence can't be something that's lacking. Like there's a even a trade that I took this afternoon. It has when the conditions are right, it has a really good efficacy in it, but it's not 100%. It's like 75%. So I still, even though I know the setup and I have to take the trade, there's still part of my brain that gets nervous while I'm in the trade. And nervousness is a good thing. Nervous can tell you that you're sized right. Nervous can also tell you that your brain is rocking and you're where you need to be in this. Okay, now before we go into the questions we actually use for debrief, also remember that as traders we are storytellers. Okay, so when we're placing the trade, we place the trade on the hard right edge of the chart. So we can see what's happened thus far. We don't know what's going to happen this way. So we're basing it on a narrative of where we believe it's going to go. And when you first start out as a trader, you're not a good storyteller. you're writing Dick and Jane stories. Very not very nuanced. It really needs some development, and that's okay. That's appropriate. That's part of it. But as you go and as you learn more how to read the auction and how the auction works, you're going to get to be a better storyteller. You're going to be able to say, oh, based on these conditions, here's what are the likely scenarios that would come out of that are realistic and make sense given all the inputs that are going on at the time on the hard right edge, not based on what's happened, because what's happened is not really important. It's what's going to happen. So remember that we're storytellers and everything that we do is subjective. Now, here are some questions that I ask when I'm debriefing the trade. So here's the first one. What prompted me to take the trade? It's real simple. Like, what prompted me to take the trade? And there in my in my own past, uh, I'm going to disclose to you a number of reasons that I took the trade that were not helpful and ultimately led to losing trades. Uh, I saw a tweet. anybody like saw, they were on FinTwit and they saw a tweet and they thought that was the reason to take a trade, or some person said something, or they watched something on CNBC or Bloomberg, or you read something in your Schwab reported something, that prompted you to take this trade. But for you, when you look back at this trade, why did you take this trade? I'm trying to think if he's in here. I don't know if I see. No, Dean's not on the call. One of the traders that is going through our development process right now, Dean has done a really good job going through the process. But one of the first things that he did, as because we were having log trades and debrief trades, and he would say, okay, the reason I took that trade was fear of missing out. Okay, well, here was the remarkable thing. When we look through all of his trades and we isolate the ones out that were fear of missing out. So as it was, he was almost a break-even trader. When we took away the FOMO trades and then reran the totals, he was a profitable trader. Okay, so this is why it's really helpful in your debrief, because if you go, oh, I was taking this trade because of fear of missing out, because I just had itchy trigger fingers and I had to have some risk on. Well, if I know that that's a challenge for me, then I can have reminders or different things. I can do some meditation to prime my brain to go, okay, I'm only going to take trades. I'm going to look out for that FOMO, and I'm going to look out and catch myself before I put that trade on to make sure that FOMO's not there. So that's the first one. Is what prompted you to take the trade? And it can be an easy thing to write it out. The next one is, was this a planned trade? Was this a planned trade, or was this you just reacted to something? You reacted to some price action or something. Like, what led you into this trade? What was the opportunity? Now, when we talk about opportunity, we look at specifically, we think of an objective price target. Okay, so just to go over here and get my pen tool. So over here on the right, I've got an ES chart, and this afternoon I took a short. Now, the target price that I was looking for was right here. 27.37 was my target price. So the reason that I got in the trade was because I was looking for trade to 27.37. Now, we did not achieve 27.37, but I started with the opportunity, with the target. Okay. Most of the time when I'm doing trade reviews and we go and look at trades, and this it could be true of you as well, is that someone says, oh, well, here's a price action trigger, or here is something that got me in, or if I see this pattern, I get into the trade. That's fair. You're going to find lots of that kind of stuff on YouTube. And here's the problem with that. Whenever you have a pattern like that, how do you know how much risk to put on? How do you know? Like, you don't know, because you don't know where the target is. You don't know what the opportunity could be. It could bring, like, if it could be a crude trade, it could bring you $3 of opportunity, and it could bring you 5 cents. You don't know. So if it's based on the trigger, not the place that I believe that the auction is going to go as a storyteller, then what ends up happening is I may put on 20, like in crude, I may put in 20 cents of risk for a 5 cent opportunity. How much sense does that make? Doesn't make any sense. Like, now, if I have an opportunity and I go, okay, I've got $1 of opportunity. In fact, trade that I debriefed with the team earlier this week, there was $1 of opportunity in that trade. My initial risk was about 20 cents. Okay, so I'm looking for that dollar. I'm willing to do 20 cents of risk because my reward to risk ratio is in sync. And you'll find traders that say, well, I want to hold it for a certain reward to risk. That doesn't work either, because How do you know if it's going to go there? One of the key advantages of why we look at the profile and why we look at prior auction inventory is because we can objectively say, hey, here, given these other conditions, here's a likely target, which helps us match reward to risk. And when you're doing that, hey, I feel great putting this amount of risk on, and I can hold the trade. Most people who get itchy trigger fingers and pull the trade off is because as soon as it goes profitable, one, they get the dopamine hit that says, hey, I got to be in the trade. Second, they don't know where the target is. They don't know what the opportunity is. And so when that happens, like as soon as it gets in profit, man, I gotta protect this thing. And that's not gonna work well. So what was the opportunity? What was the name of this trade? What do I mean by the name of this trade? So when you're logging your trades and you're going back, over time you're going to have a playbook of trades, a playbook of setups that you will use that you can name. So when traders start with our community, there's two setups that we give them immediately. So one's called an IB extension go with trade, and the other one is called an IB extension fade. All right, they're two setups that have specific criteria. We know what the targets are. We know a whole number of if this, then that statements that define that setup. Here's what's also helpful about that is when you go back and look at that trade, you can say, all right, I took this trade, it was an IB extension go with. I took this trade, it was an IB extension fade. I took this trade, it was an IB extension fade. And then over time, you can look and say, oh my gosh, I'm way better at IB extension fades than I am at IB extension go withs. So if I'm a business person and like I made tables and chairs and I found out that I could sell all of my tables, but nobody wanted my chairs, why would I make chairs? Right? Like this is the same thing that faces traders, is that every trader's unique, every trader's different. All of you have wonderful and fantastic personalities, and some of you are going to find certain trade setups better than others. I'm trying to think if Steven's on here. One of our traders is really, really great at one of our setups, which is called a trend continuation setup. I suck at this setup. I can't execute it well. I keep practicing it, and it's just not a trade for me. It's still a sim trade for me. Steven loves it. He's doing great with it, and it's a really, really good setup. Best I can do right now is I can identify that trade is in play, and it tells me to basically just stay out of the way, that it's not a setup for me. Okay, because I've learned that for whatever reason, I'm just not a great trend continuation trader. I wish that I was. I keep working on it. I keep building that skill, but it's just doesn't come natural to me. Some of you it does. Okay, so but you have to have a playbook of trades to say, okay, what are the conditions that say that I could be in a trend continuation, and what are all the other things that affirm that? Then when I'm going back and logging my trades and debriefing them, I could say, all right, here was a trend continuation trade. Here was a structure cleanup trade. Here was a VWAP fade trade. Here was a binary second move trade. And you're categorizing all of your trades to sort out which are the ones that you've got nailed, that you know that you can come to the market with confidence and execute on, or the ones that you need to keep working on. Okay, most traders that I encounter that are struggling with consistency don't name their trades. They don't even know what the trade's called. It's like, and it's like I had an RSI oversold indicator. Okay, like there was a trigger, which again, what's the problem with that is it's a trigger that has no opportunity weighted against it. So how do you know how long to hold the trade? Okay, so what was the name of the trade? Next one. Did you answer the 4 questions? Okay, so we referenced earlier, there's 4 questions to ask and answer before you put on a trade. And they're real simple. So the first one is, what's the opportunity? That's why I call that one out. What is the opportunity? What is the target that you're looking for? Start with that first. Where do I think this auction will go? Okay, second to that is, how much am I willing to risk for that opportunity? Is this we always try to define things as a 3 to 1. If we can get bigger than that, better. But and in some situations, I'll do a 1 to 1, but those are typically because I'm expecting a really quick tempo trade around that. But that's the second one. Then the third question is, all right, what should happen if I'm correct in this trade? Again, this is the storyteller part. Like, and it also speaks to how well you understand how the auction process works to be able to anticipate how it will behave going forward. All right, so that's the next one, is like, how should that happen? And then the last one is, what shouldn't happen? What should I not see? How should it not behave? Because when you say, here's my opportunity and here's my risk, well, that helps you know where your stop is. Okay, and then we use short-term triggers to get into the trade, but I've defined the risk and reward windows. Then once I'm in that, if it's behaving as expected, I can trail the trade. If it's not behaving as expected, like say for example, I put on a trade and part of what would tell me that would go right is it's going to happen in the next 5 minutes. Well, what happens when I'm half an hour, 45 minutes into the trade? That's not according to how I constructed the trade, and so I'll get nervous around that, because if one of the components that got me in the trade was this is going to happen fast, and then it doesn't, then that's a clue to me that I'm not going to let it take the full loss, and I'm going to get out of the trade and then reassess. Because here's the thing, you can always get out of a trade and reassess see if the opportunity is there. You can always buy higher and you can buy lower. You can sell higher, you can sell lower. But once you're in the trade, the brain will do everything it can to keep you in it, because nobody wants to be wrong. And if I take the loss and I cut, then I'm admitting that I'm wrong. And your brain is evolutionarily wired to fight that. So by doing this on the front end, answering these 4 questions before you put the trade on, you're priming the brain to make the right choice because you've already pre-thought it. So that's a key thing as you're debriefing the trade is, did I answer the 4 questions? What were the answers to the 4 questions when I put the trade on? Because if I don't have those, then I'm in trouble. So case in point, all right, let's go look at this ES trade. So this trade is called, an IB extension go with before I have confirmation. So I'm anticipating us extending past the initial balance range of the trade, but I don't have confirmation yet. But that's what this, but I'm seeing signs that suggest that that's going to happen. Okay, so specifically, not that one, this template here. And then let's explode this up so we can see it in its glory. Okay, and so all these lines on here, these are reference areas. They're pre-session decision areas. There's areas that if the auction reaches, I'm looking for and anticipating some type of behavior. And the red ones mean that, because we closed below those, we opened above them with a gap, so those now become downside references to the auction. So early in the day, we had spent a number of times, we had opened above this 2770 area and we came down, tested out of it. We did that a couple times, and then eventually extended the initial balance high, which set the stage for 2820 kind of scenario. Could have been in there, but after lunchtime, after 1 p.m. Eastern, we had an engulfing 30-minute period. So these are 30-minute periods with 5-minute periods inside of that. And then on top of that, in fact, let's not get down here to the 5-minute yet. Let's just look at this from a 30-minute. There you go. Okay, so here's this engulfing period. Now, one of the things that I noticed, so these numbers below here are order flow. So it's the difference between trades placed on the bid versus trades placed on the offer. And what I noticed was a significantly strong number and an engulfing period. So that was interesting, and it also took us back to the most traded price of the day. It's like, okay, that's something. I still knew that every time we had come down to the 70 area, we were just buying it. So there were sellers there, but there were likely also stops there. That if we got tempo, if we got, you know, if we ran into that, we could punch those, and then we could take out this IB low, and then I have a target that we could close the gap because we had a small gap. We could close the gap and we could really quickly flush this thing. Okay. So that's interesting. Then I get into the next 30-minute period and I'm getting close to this zone again. So at that point, I'm now interested to see if we could queue up the energy to break this thing. All right, so now I'm going to go back to that 5-minute. Now I'm noticing something else. Okay, I'm noticing an area right here. These are 5-minute bars, and I'm noticing a small bracketed range where we're just ping-ponging inside of that. Now, typically what happens is after you spend a little bit of time in a range like that, if you can define a range, is that eventually you'll violate that and get some positive excursion outside of that range. Now, given the fact that where it was happening was right near the open. Okay, so the number of times, you know, the open is a great reference. The number of times you hit the open, the more times you hit it, the weaker it gets, and you could have somebody throw on some gas in that trade. And so I was just kind of watching this, and I was looking for some strong behavior to trigger me in. So again, here's the opportunity. So I'm looking at 27.37. I'm up here trading at 79. All right, so I'm looking at about 40 points of opportunity. Okay, so at 40 points of opportunity, I'm also looking at this right here is about 10 points wide. So I'm thinking if I get a break here, I don't want to see trade back above this bracket. So that's my risk. Now I just got to find the break, and I want to see, so what should I see? I want to see selling tempo and order flow that's big to go with into this gap. And what we found is as we broke here, this 5-minute had a really, really big delta number. So short on the break of this, confirmed by I'm getting good order flow numbers. I get in the next 5-minute an additional strong order flow numbers. So at this point, the trade's working great. All right, so in at 75, stop at 86, looking for 37. And then now what I'm looking for is I want to see continued contracts put down, and that's what these are. These are each contracted price. I want to see continued contracts placed as we're going down. Now notice there's this blue area right here. That's a high concentration. That's the top 20% of volume at price in that 5-minute period. I don't want to see trade back above that. Okay, so because what that represents is both buyers and sellers are active there. That's building out the contract volume. And so we had pushed and made a new 5-minute low. I'm like, yes, like, you know, and Jed was on the trade with me too. Like we're looking at that, and then they come back through here, and here's the spot where I get nervous because I'm like, if they get back above that, then they could run back to the IB low, and we could get back inside and run this thing. So when they traded back above that area of volume, we covered the trade. Okay, so now as I debrief this thing, I mean, I would say in terms of execution, it was a planned trade. I saw it had a clear opportunity. It met all the criteria. I had answered the 4 questions before I put on the trade, you know, and then like what should happen? I should continue to see selling deltas and contract volume lower. I stopped seeing that. So that's the what should I not see? So even though I didn't get all the way to the target, I still took some nickels home on the trade. And, you know, in the debrief of, you know, what likely thwarted this trade is it's, even though it's a Thursday, it's the, you know, we don't have any trading tomorrow. It was a low volume day. So, you know, it was ripe that we could have struggle to really get there. Because the question is like, who's really going to sell this thing? You know, what's the catalyst around that? So, you know, in terms of expectation, it would have been not as surprising to see this behavior, on an end of week trade, and that's also probably why, not probably, that's also why I was really quick to cover the trade, just because of that dynamic. Okay, does that make sense? Everybody tracking with me? All right.
Hey,
I
Josh,
know.
can I just mention one thing in here?
Sure.
On that trade, now I haven't debriefed that trade myself, but it worked. Okay,
Yeah.
we picked up capital on it. But was there things that we could have done better? Oh, absolutely. I didn't exit where I had originally told myself I was going to exit. I was looking, then I got the dopamine at the bottom going, oh, this thing's going to flush, right?
Hmm.
And it bounced on us, and I had to take a little bit higher exit. It wasn't, I didn't give up too much, just a couple points, but you can always work on something. And Josh is doing this is a phenomenal series that you guys need to really pay attention to, because there's besides identifying your risk and knowing where your ultimate target is, that's obviously very, very important. But you always have to review your trades daily. You have to. And you want to know why people don't do it? Because they're afraid.
Hmm.
They're afraid of objectively looking at these things, because guess what? It's you that's doing it and nobody else. Nobody told you to put that on. At least I hope they didn't.
Yeah.
And then two, nobody's holding a gun to your head saying you got to take that trade right here. This is you taking the trade, and you have to objectively look at that. And if it goes wrong, um, some people think it's a reflection of them. The truth is, couldn't be further from the truth. The truth is this: it's not a reflection on you as a person. It just didn't work out. Remember, the markets can do whatever they want to do. We didn't know this was going to work out. As Josh outlined this trade, it was a great trade. We had risk identified. We knew how far this thing could probably go. And after what they did this morning, there was a likelihood of them doing that. So we really liked this opportunity. As I put a small video out for our community on how I got into the trade and where my risk was. And, I think it came within like 3 points of stopping me out. Okay.
Yeah.
But I was okay with that, because I liked my risk reward on the deal. So, um, you can always find something to work on. Don't ever be afraid of of doing what Josh is talking about, because you'd let me know what you think on this, Josh. And I think we think the same along this lines. This is just as important as knowing when to get in and where your stop is. I mean,
Oh
I think
gosh.
this is huge in my opinion.
Oh yeah. It's the whole ball game.
It is, yeah.
It's really the whole ball game, because and this goes back to the comment that I made about, you can have a trade that actually wins, and uh, you shouldn't take that trade.
Yeah.
And it's so dangerous, because if you have a positive outcome in a trade that was not defined, you've rewarded the brain for lazy process. So of course you're not going to get good results. like like
It'll come back and bite you
it's going to
eventually.
bite you big time, and it's also going to frustrate you, because you're like, what the heck, I did it that time and it worked.
Yeah.
Like, why is it not working? and it,
It's
and it
just go
and
ahead.
what's remarkable is it only requires one instance
Yeah.
of a positive expectancy on an ill-defined trade to have you do that over and over and over again.
Yeah.
It's
We have some
amazing.
guys that are really good at breaking trades down. You had mentioned Dean. Dean's really good at that. I think Lars is here. Let me see. Lars. Yeah, Lars is here.
Yeah.
I mean, he does phenomenal. He writes books on this stuff, and it's great. It really is. I know Cody does a good job as
Yeah.
well. These guys are really developing in to become really good professional traders because of that, I believe.
Yeah. 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 And if it's going to be your profession, you gotta have it. Gotta have process, because process allows you to isolate and remove error. Think of it like quality assurance. Okay.
Yeah.
I want to look at another trade and debrief this one that I took this trade. I'm not real excited that I took the trade. um, and all things being, I would not have taken this trade. Um, I shouldn't have taken the trade. And this one of those where I shouldn't have taken the trade, even though
I
It had a
talked him
positive,
into it though.
even though I had a positive outcome. Okay. So crude oil. Okay. So we have macro stuff going on with crude oil. We know that the Saudis have gone nuclear in an attempt to crush U.S. Shale producers by um, just flooding the market with production. So like when they couldn't agree on cuts, the Saudi says, all right, we'll see what you're going to do, and we'll raise you and just put the pedal to the metal on production. Oil prices have crashed. We're seeing prices we've not seen since 2006, like insane. Um, and they know that there is a margin that they can continue to produce and make money that Russia and the U.S. specifically can't handle. And so it could lead to lots of bankruptcies of U.S. producers. And so there's now, all kinds of pressure, even from OPEC nations who don't have the same margins as the Saudis, who want to do some production cuts and raise the prices. So we knew there was a big meeting today. OPEC is notorious for not agreeing to cuts, and even the compliance around that fails. It's really kind of a, I don't really know what OPEC achieves. That's a whole other story. But we knew that there was going to be a lot of volatility in crude. That's the moral of the story. And we don't trade. We don't make a guess on um, a direction based on that. We just know that that's a catalyst. And when you have a catalyst in the market, what that does is it means that the market has to find out where value is. And that new information could either mean, oh man, we're way undervalued and crude spikes higher, or we're way overvalued and we go back, or we're well valued and we need to be where we are. You can see there's a massive spike here at 2660. That has been the balanced trade. We traded above it, we traded below it, and we finally broke lower away from it into the close. So that was the first thing that I missed thinking about, was that we had moved higher, moved lower on big moves, and we're accepting past that key level. Okay, but what I was looking for was a responsive long trade. Specifically, what I was looking at was, all the value for the day was up here, and we had a prior naked point of control this is a volume point of control from a prior session from yesterday, after EIA, that the auction had held and bought from and was untested. So what I was looking for was, I was looking to see if the auction could come down into here and break out of that and then trade back up to about 25, was what I was looking for. This is called a high volume node reversal trade. Now here's some things in the debrief that I've missed. Now notice right here. You guys all see that? See the number of times? So in overnight, we tested that real close to yesterday's close. In C period, we tested it, got in that ballpark. In F period, we test that, and then we finally broke that in the period that I was looking for a responsive buying trade. Okay, that's not smart. It's really not smart, because all the, you had all those queued up stops, right around 25.10, that now are finally giving way. It's also the end of the week. We're heading into the close. The tempo is to the downside. What the heck am I thinking about trying to buy this thing? Okay, so in hindsight, I would not take this trade. When I looked at it on a shorter time frame, what I did find was that the auction came down in here and bounced right out of it. And so what I basically did is I just, as soon as they couldn't break through this, I got long, and my risk was below. So, if we traded one tick below the lows after we came back above this zone, I would be out. So, I was looking like 10 cents a risk, on an entry, looking for 50 cents in a snapback. And we got the snapback, okay? But you can see how quickly this thing rolled back through. And then if I had not had to find my risk, would have absolutely been punished and would have taken almost $2 of risk into the close. So this is one, and this is why the debrief on a winning trade is so important, because when I look at that, I go, man, that was a really unwise trade. What I would rather have seen is, I'd rather have us come into that price, maybe even push through it, kind of like it did here, where it pushed through it later, And then I wanted to see it come back in with really, really strong buying order flow, and then, define a really nice excess low, um, that we could define to know that we had shut off the sellers. There was no shut off of the sellers at that point. They were getting short into the hole. Okay. So that helps me, so that if I start thinking, and this goes into, like, as I'm building the trade, timing is a part of that as well. Yesterday I was looking for shorts all day long in the ES and never got them. I had prices that I was looking for potential shorts, but we got to them so late in the day that there wasn't going to be any meaningful shorts to be found. So, part of the definition of that trade is, when do I need that level to be hit? Is there enough time? This was so late in the session. Who's going to buy that at the end of the week? Like, that's just totally unwise. So again, good to do it on winning trades or losing trades, because that can, again, prime the brain to, man, yeah, I got rewarded for that, but I shouldn't have. Does that make y'all tracking with me? I should not have been rewarded, and I want to not take that trade again. And even as I, put out my criteria, even within that setup, what's the opportunity here was, hey, I see that there is a prior volume node that I could see some reflection off of. If I see that level hold, if I see the order flow turn, I got to have a target higher that I'm looking for, which is back to the base of those singles where the breakdown was. Okay, I've got those components, but timing was missing. Really, really strong order flow was missing. Understanding contextually where I was missing. And those are all parts that I will carry forward when I look at that opportunity in the future. Which, this leads into the, what auction information would have aided better execution. So that's it. Like, these are the simple questions that you can use. I mean, you can have them in a journal. If you want to have them in a spreadsheet, be my guest. But the point is, however you do it, you do these questions, because what it's going to do is it's going to reinforce in the brain, here are the things that I want to look for next time. So then when you go to put that trade on, there's additional criteria. Now, this may mean, here's what this may mean. It may mean that you then don't take the trade the next time. And not taking a trade because it didn't meet your criteria is a win. And actually, like, log those as I didn't take a trade today because it did not meet my criteria, and reward your brain that way. The other thing it can be is, if I've got 10 criteria in a setup and I've got 5 of them in play, but I'm missing the other 5, that can also tell you how to size your risk. If I have one that has 9 or 10 of 10 criteria that I'm looking for, that's a big trade for me. If I've got 5 of them, then I may still take the trade, but I'm going to size the risk down. Does that make sense? Because I don't have as much affirmation in the trade. Okay. All of this, and I love this quote from Mike Bellafiore at SMB. It's the thesis plus a setup plus order flow plus a fight for entry equals one good trade. So, part of going through this process is, what's the thesis? What was the ultimate narrative that I had for the auction as a storyteller? And then did I find a spot within that narrative that I could execute one of my setups, one of my named setups? And then did the order flow, like how they're acting on the bid and the ask, is that affirming it's time to get in? And can I find a spot where I can get in and get good price so that I get that good trade? Like, this is part of the process, and the reason that we debrief is to say, hey, was the thesis accurate? And was there a defined setup, or did it just feel like I had to have risk on? Was the order flow affirming that? Did I fight for good entry to tell me I had one good trade? Okay. That's it. That's all we've got for you today. A couple next steps. For those of you who have not spent any time with us, we'd offer that anytime to spend a week with us. We have a 16-week development process. We offer anybody who's a developing trader to spend a week with us. You'll be a better trader after that week. If you want testimonies from anybody who's actually on the call, we're happy to connect you and get some answers to questions. We do post some things on Twitter, so if you want to stay connected with us, you can do it via Twitter. Also on Facebook, although I don't think really anybody looks at Facebook pages anymore. I just kind of auto opposed to that. And then finally, if you need help or have questions, you can always send us an email at team@tradewithprofile, or you can give us a call or text to this number, and we'll be happy to get back with you. But hope that this was beneficial. I hope that you take the opportunity to debrief your trades, to go back and look. Thanks Mark, thanks Jack, thanks guys, and do that as a process. Even take this long weekend, go back and debrief all of your trades from the week and see how it met the criteria, and see how you can make better trades in the future. And just even know, like, as part of my trading processes, I'm gonna debrief my trade. I'm gonna go through that process every time I take a trade. It's a little bit like, so my brother is at one point he was highway patrol in the state of Texas, and he would often say that the amount of paperwork that he had to fill out discouraged him from firing from his weapon. In some sense, if you have enough process around you, it can be a fence to prevent you from just over trading. And over trading always leads to poor performance. When you slow the process down, and you define the trade and you debrief it, and you define the trade and you debrief it, and you define the trade and you debrief it, you're going to take less trades, but they're going to be trades that you're going to really love and be excited about it, win or lose, win or lose. And because of that process, it's going to lead to consistency that's ultimately lead to the results that you want. Okay. Everybody have a fantastic holiday weekend, and be safe out there. Help us slow the growth of the virus and flatten the curve, and we'll get through all this together. And thanks for your participation. Really do.
Thanks, guys. Have a good weekend.
All right. Peace.